Now, for more on the CBA results handed down in really the midst of all this other issue around the AUSTRAC allegations, I'm joined now by Jack Lowenstein, the Joint Chief Investment Officer at Morphic Asset Management, as I am each Wednesday. Someone from Morphic joins me. Jack, let's talk CBA, both the result and your longer-term view. How do you see this result?
Well, I'm not going to talk about the result because that's a very short-term issue. I'm going to look at long-term, and in my view, in the long-term, CBA remains very overvalued for a low-growth company compared to global peers, compared to its history, and compared to other opportunities, even in banking in Australia.
All right, so it's what? It's about 14 times earnings, is it?
Yeah, and I think that price is really implying that it has growth and that it won't have structural and regulatory issues going forward. And in our view, although this has not been something that's affected CBA's customers, we do think that you tend to get cockroach factors here, and we've been shorting Wells Fargo for the last year against other US banks. So I think I've got a few insights I can share with you there, which is typically these problems don't come up on their own. They're typically part of a pattern.
All right, so are you talking CBA now and the AUSTRAC problems being like the cockroach theory?
I'd be surprised if we don't see further problems surface, because clearly this was partly a technological issue, but partly also a problem of, if I might say, culture or just a slowness to bring it to a
sort of accountability, and let's get some action. I mean, he did talk in that. I don't know whether you were able to watch it all, Jack. You're probably far too busy, but he did talk. He was asked about the branch people who did alert the bank, and he said yes, he felt the branch people did exactly the right thing, and that's what he'd want all their people to do. So he said we still have to check why it seemed to take a while to get some action happening after these branch people had said, look, some of these transactions don't smell right, don't look right. So, I mean, that is either an inaction. He didn't believe that there's any evidence that it's deliberate inaction.
I can believe that. I think the problem for very large, very successful organisations who've been successful for a long time is that the expectations of those companies and their leadership get bigger and bigger. But at the same time, it's harder and harder to deliver on them. So, yeah, I'm very reminded of National Australia Bank, which was, you may recall, Helen, was regarded as the best Australian bank in the 80s and 90s, and then gradually lost its mantle. And the trouble was, it just was very hard to maintain expectations. So they kept on producing results that met the headline numbers that the market was expecting, were more and more tenuous, and then eventually they couldn't even do that.
All right, so but are you saying CBA is anywhere near that? I mean, they have just pulled out their 8th record result.
So did NAB. They put out record result after record result. They avoided the mistakes of their competitors, but eventually it was just too much of an expectation, and their share price premium couldn't be justified by their performance.
All right, so Jack, I just want you to see if you can, I mean, I know Wells Fargo has had some very serious problems. What is the comparison that you could make with CBA? Are you comparing the two?
Well, I mean, Wells Fargo, in an American context, the bank that's most like CBA. It has huge market share. It was very hard to grow its market share anymore. And when market growth was slowing, then it was really struggling to achieve growth because it can't steal any more growth from its competitors. CBA is in a very similar position. It's by far, it's the biggest, it's not by far the biggest, but it's the biggest of the big four. So it's very hard for it to grow when the market itself is not growing that much. That's one comparison.
But you're not you're not saying the problems are as bad as Wells Fargo's?
I'm not saying they're as bad, and they're clearly different. But the other point I'd make is that Ian Narev, who's done a pretty good job over his time, is coming to the end of his tenure, no matter how the board react to this recent event. And an incoming CEO will do what all incoming CEOs do. He'll try and make sure he's recognised every possible problem he may have inherited. So you can expect a bit of a clean-up process when he comes in.
Yeah, so you reckon that will happen, whether it's under, sorry, you're saying the next person, but will Ian Narev, he talked about an extraordinary team under him. Do you think there will be some sort of clean out, or will it have to wait till the successor?
I suspect it will wait till the successor. That will be my guess.
All right, Jack Lowenstein, always great to get your view, and on such a busy day today, I do appreciate you joining us.
Thank you very much indeed.